Good morning, good afternoon, good evening, depending whether you're watching this live, like the premium members of Academy 55, or if you're watching the recording. David Kahn here on Friday, the 15th of November. It's 4 minutes to 8 in the morning here in the UK. We're looking at the EUR USD on the 1 minute time frame using our Academy 55 indicators and strategy. We are perhaps on the verge of going for a buy. Now, in the event of what's been going on over the last 10 days since the US election, personally, I find myself in a negative state, -5, and also and I attribute that down to the extra volatility that we're seeing in the markets. So if you ever find yourself in that state, there are more prudent actions that one can take. In other words, the first one is do what we think as directional trading. In other words, don't go against the status quo. And as you can see, price is above the purple line, so there is a buy bias. So consequently, the next one we can take is a buy, but that means to say that the bigger picture is for a buy. So after all the selling power we saw over the last 10 days, because basically the dollar was gaining so much momentum, so much strength because of the President Trump effect. Everybody's jumping on the bandwagon. Volatility is been rife over the last couple of weeks, 10 days, because of this. And the situation is generally a lot more volatility in the EUR USD department than we normally see. And we, in the Academy 55, is meant to be run over smoother conditions than that. I'm going to be releasing a video over the weekend to basically go over some of my thoughts and picking reasons why you may not wish to trade at that particular time and come back when trading seems a lot less volatile. I have some particular ideas on that, but I will not be going over that on this particular this time. But I will be releasing a video, doing a video. Well, I'll do it later on today, explaining my thoughts on what you should do if you find yourself in a negative situation. But basically, stop, recalibrate if you find yourself in negative, because you're not doing yourself any favors with your mindset and just trying to flog a dead horse. Just recognize that you are, and just wait for better times. That's the overriding rule. But there are other ways you can counteract that, and I will, like I said, I'll be releasing a video later on, either today or Saturday, or even maybe even Sunday. So watch out for that. If you're a Academy 55 member. But where we are now is I want to we're down for taking the next buy, but where we are with the zones, we've got a buy zone there and sell zone there, so we're in between, right in between, on the 5 minute time frame. This is another little instance when you see wicks above and below on the higher time frames, and that's within parameters. But if you say you had a candle like that on the 5 minute time frame and it's as big as that, but there was a wick below, which means indecision as well. Basically, you're talking a great deal of volatility. So therefore, if you get down onto the 1 minute time frame, say for example you had a wick below and a wick above, like we see here, but that candle was like a 10 pip move, like that candle there, 60 down to, yeah, that's a 12 pips within 5 minutes, and there was a big wick below here, like that candle there, then you can almost, and that was within 2 or 3 candles of when you were coming down onto the minute, you know you're in for a volatile ride or potential volatile ride. So it may be best just to recognize that and sit out. But as it is now, we are within the parameters. But the indecision, indecision. These are all 5 minute time. Indecision, which is okay because they are small candles, because that is 6 o'clock in the morning. So one would expect not much movement anyway. But if you get that situation and they are 10 pips or more, each measure from wick to wick, then you're in for a very bumpy ride if you go down to the minute. So therefore, it's best to stay away and come back when things have settled down considerably, especially if they're in 2 or 3 pips from where you are actually wanting to trade. These little things. Also, if you're a negative, it might be prudent to go from 1% per trade to 0.5% per trade. Still treat the Academy 55 strategy the same way. But the strategy is used. Volatility is not this strategy's friend. It's no, to be fair, it's no strategy's friend. If it's just volatile, recognize the volatility and just go away. Be prepared to go and watch some more trading videos, or no point trying to trade it because you're not learning anything. Because if you trade it and the volatility goes your way, then you've got a false misconception that oh, it's okay to trade the volatility. No, it's not. It's not okay to trade the volatility. You just got lucky. It's more akin to gambling, and you got lucky that time. But to be consistent trader, you shouldn't learn to trade through volatility, because you may be lucky, you may not. It's gambling. It's not trading. It's not being a consistent trader. And what we're after doing is looking after what you've got, i.e., when you get a certain distance up, if you take a trade, if you get a certain distance up, put your stop loss to entry to protect your equity. Well, it's exactly the same as that when you are come to look at a trade. But the overall riding bigger picture is, I do believe we are looking for buys, and as it happens, we are looking for buys anyway. The way I've often seen these. We're looking for this to turn momentum into a buy now. The way I often see this happening is when the trend line merges with the wave. Usually we will get a turn in circumstances then. So it could be a while, as you can see. But this is the situation at the moment. And so, like I say, I'll be releasing a video. There are several different things I need to get off my chest and release a video about. The chances of me, I still believe I could turn a profit this month in my own personal overall figures. But it's not going to be. I don't believe it's going to be like it has been over the previous months. But it's all about stopping the rot and protecting what you've got, basically. Hey, that could be a good slogan. Stop the rot and protect what you've got. Wow. It's just coming to my head that. I don't know where I got that from. Anyway, so that should be a good mantra, actually. Stop the rot and protect what you've got. Yeah, do something with that. But that's so what's the latest news? A couple of light releases to move things along in the session ahead. Well, there's no actual red flag news. It's pretty quiet officially. So I'm expecting more of this. Well, not expecting, but you can imagine there could be more of the same. Nothing great happening at the moment, which is okay. It's fine. It is what it is. So we've on the 5 minute time frame, we've got we had a big surge here. And what do I say when we have a big anomaly, 3 or 4 candles together? What we do is we put a candle, I'm on the 5 minute time frame now, at the bottom of the low there, drag it up to where it got to, which is there, and remark where 50% is, which is, I'm going to put a dotted line there to remind me where 50% is. 50% of that move, that's all buying power there. So that's what we call an anomaly. So I put my fib at the bottom of the candle, 5 minute candle, to the top of the candle, just basically marking out 50%. So I'll put a line there, do away with that. What have we done now? Did the wrong one. Hang on. Undo. Do away with that. Remove that. Oh dear, what would, hang on. That's better. Sorry, try again. Do apologize. Horizontal ray, put it on where it's 50% of the move, which is there. Do away with the fib. Remove the fib. Now I'm going to turn that into a dotted line now, because it's different to all the others. Go into settings and just turn it into a dotted line. And that will I know that'll signify 50% of that move there. So price effectively, when I go down to the minute time frame, this move here on this sell could effectively go down to there. It might do it later, of course, but it'll at least have to come down to there at some stage. One, to mitigate all this imbalance that we're seeing. And two, that's the way, but like I said, the timings of these things isn't. If we knew the timings of these things, it would be brilliant. There would be no point for us being here, really, because we'd all be millionaires. But right now, we could be looking at a buy. We've got a buy alert. I've got to wait for the trend line to go green. The volume just started doing green. The wave is doing green. Stop loss will be at the trend line. But I've got to wait a little bit. I'll lock that in there. All the time we're at 4.5. Being volatile again because we are in London session now. But I've got to wait for the trend line to go green. So that could, in its volatile way, could go up and come down again. So but the trend line being green is important. Trend line is at 3 o'clock now. So, and also we are in a range. Also, I'm well aware of that 50% line of that big move down there. So really the situation is I would be quite happy to personally, knowing all that, I've got more reasons not to trade than reasons to trade because of all the sideways movement I'm seeing. The 50% of that big 5-minute move there that I know price has got to react to at some stage, and indeed, but bigger than that, all the indecision because price coming down here to react off that 50% and more, it could do more, can be done at a time of the price actions choosing. So therefore, it could be done later on during the London session. But I know price has got to come down here eventually, and probably within the next hour or two, probably. Although obviously we don't know for certain. But I'm seeing lots of sideways movement, which happens 80% of the time anyway. So there's more reasons for me to choose not to trade at this time than there is to actually take advantage of that buy. And indeed, it's come down to settle down again. So in view of the volatility that I'm been seeing over the last 10 days, and it's sort of acted on a negative impact on my monthly target. I'm looking after my equity. See all this sideways movement here. This could carry on for, because like I said, there's, although we stay clear of red flag news makes the market move. So the result of no red flag news is this. It's a bit of a catch-22 situation. But the overriding thing is it's okay because I'm not losing money. And for you, it's okay because you are gaining experience of the market. And sometimes, well, not sometimes, all the time, it's prudent to think when a good time's to get in and when a good time's just to stay out, you know? Combined with the fact that we're not in any kind of zone for extra confirmation. I mean, our zones are here and here. We're in nowhere, we're in no man's land. I mean, see the size of the candles, there's just nothing going on, which is fine. But I don't want to be tempted into a trade for the conditions I've just explained. And this condition could last effectively all morning if they wanted to. There might be big news later on in the New York session where things will move. Just having a, I'll bring this over. Just having a look now. Next red flag news. Right, 1:30 today. Right, yeah, look, we got 5 impact pieces of news at 1:30 UK time. So that could be significant for the dollar. So therefore, this I could well see this situation may, unless they've had the time to disseminate the news and find out if it's good news for the dollar or bad news for the dollar. They're all getting together. We don't know that as retail traders, unless you're a top business analyst, which we're not. I'm a retail trader, so I don't know that. They may disseminate it and make a move accordingly to what they think the news is going to bring. Or if they don't know, they'll wait for the news itself and then react to disguise where they want price to go. So we could see this effectively. We could see this sideways movement all morning because there's nothing else, no other red flag news to make the markets move, or it might not. But that's just a scenario that could happen. But our job is to protect what we got, stop the rot, and protect what you got. I like that. Yeah. My goal, my psychologically, my monthly goal now is to get to a positive, whatever size, be it 1%. Even if I draw level, that's for me. That's a good place to be after all that's happened over the last 10 days since the US election. But yeah, this is the 50% line from that anomaly of all that the candle going up. So I wouldn't be surprised if price comes down there and beyond. But when it will, Go back on the 5 minute time frame. See all these imbalances down here. They need to be filled at some stage. We know that. And that's the 50% of it. So I expect price to at least get down to these levels. But at the moment, it's pretty happy motoring along here. Also, I noticed that this level here is a significant psychological level, 1.05500, where psychologically investors think about looking at the charts and maybe going for a buy or a sell, or maybe taking longer term trades out or in. So there could be a lot of interaction at this level here also. But yeah, this is just pure sideways. And even if it does move one way or the other, we're completely out of zone area. So you have to get over your fear of FOMO, fear of missing out. Because in this case, it's a good thing because you are hopefully getting a little bit of an insight of what price can do. You're protecting your account balance, and hopefully you are cottoning on to the fact that this is no longer a trading scenario because of what we know now, looking at price and what we can see. It's no longer a trading scenario. It's more akin to a gambling situation. Heads or tails, and we don't want you to be in that situation. The Academy 55 strategy runs with the EUR USD and the US 100 because the US 100, when price goes with the volume, it usually goes and gets our 2%, recognizing all the indicators within the within the Academy 55 indicator, and the EUR USD runs really well with less volatility than we have been seeing over the last few days because of its smoother nature running. When it's volatile like it has been, it's not good for this strategy or indeed any other kind of strategy. The trick is recognizing that and acting accordingly, just getting over your fear of missing out, prepared to wait it out and look for signs of that that it's coming back in. Now, as you can see, we've got a sell zone. So, indeed, that means for us, you wouldn't be taking that buy. And indeed, I'll be looking to take the next sell because of that sell zone. So, although I'm trading against a trend, so I'll be very wary about it. But we've got markers down here, look. So, again, 2 to 1. Now, at the moment, I could indeed quite possibly see a horizontal rate on there on the 5-minute time frame. Oh, I'll change that back again. Settings, solid line. There we go. Change that back again, put it back on the minute. So you know that's a sell zone. There's no way I'd be taking that buy. But also we are in a sideways movement sort situation. On the minute time frame, very choppy, isn't it? Twenty-two pips. That's it. It's more like it. Going down towards that anomaly, all these imbalances down here, I'd be much happier taking a sell because of that. Although predominantly the bigger picture price, I do believe, is going up on the bigger picture. But at the end of the day, we only want a small move to get our 2%. I haven't seen much sign of volatility, which is good on the 5-minute time frame. Like the wick above and the wick below, I've not actually seen that. So, but we've got this sideways movement carrying on still. So. Well, we wait. In case anybody's got any questions about what they just seen, I'll throw open the chat. Please only chat about what's been going on today or not been going on, as the case may be. If you have a question, I'll certainly try and answer it for you. Put it in the chat on the Zoom call. But yeah, I'm seeing lots of sideways movement. They're possibly waiting for stuff to happen to give the dollar a chance to move one way or the other, which in turn will affect the EUR USD. So basically, if the dollar goes down, the EUR USD goes up, and vice versa. Well, we're in sell zone territory now, so although it is, and like I said, the overriding picture is to go for a buy on the higher time frames, and maybe that's where they want to take it. But I don't take a trade because of the sell zone we were in. And also we were only just out of that consolidation. So yeah, conflict, it's very messy, the reading of it at the moment. And you only need to trade once, hopefully once a day or twice. So you want to make as many of the conditions I've been talking about in your favor as possible before taking that trade. Get over your fear of FOMO and just be quite happy to watch price doing what it's doing. I certainly am now because I'm in negative for the month at the moment. My short-term goal is to get to back to an even keel, but we'll see. This is the scenario for the sell we're waiting for, because the next sell zone's up there, but we got this support and resistance line. I'll show you about that. Take that off and go onto the hourly. Put it onto a line chart. As you can see, it's been kind of support there, look, but it's been resistance there, and that's why that line is there, because that's happened more than twice. Come down just a smidge. It doesn't make that much bit of a difference, but there we go. So what's to say that price could get onto this line again and do exactly the same again? So that's why that line is there. Turn it back onto the minute. Put my zones back, my indicator back on. We are in sell zone territory. We know that from the sell zone we saw. So the indicators are telling us one thing, but and yet price is doing another. But at the same time, we're not losing any money because we're not in a trade, which is fine. So over the last, personally, over the last 10 days since the US election, yeah, it's been 10 days, isn't it? I'm on a psychologically, I'm on recovery mode now. And biding my time and picking my opportunities. Well, we should always do this, to be fair. We've got enough volume push to break that now, or have we? That's the thing. Will it go along there? So he's reacting off that line and coming back down again. Is there any latest news? EUR USD bears may set sights. All right, so they're looking, according to TraderView, sights on 0.9. 0.9. I don't know what that means. Ah, right. Yeah. So they're looking, maybe price might go all the way. I'll have to do it on a bigger time scale. Oh, that's ridiculous. No, that can't be right. That can't be right at all. I don't know what 0.95 is. But the fact they said bears are looking for it, so that means bears means down, bulls is up, basically. That's another old-fashioned terminology that we don't hardly use nowadays. But yeah, so to remember it, bears swipe down. So they don't do themselves any favors by coming out with these old-fashioned ways of dealing. But that's so if you see something with bears, that means people are looking to sell. If you see something with bulls, they are looking to buy. Yeah, I know. I find it funny now. We don't hear that terminology too often nowadays, but us TradingView are trying to revive it again. Now we found volume for a bit more of a buy. And indeed, we've broken out the zone now. And we've broken clear of that support and resistance line. So let's just follow that along, really. You couldn't have got into, hang on to there. If you was going to be very risk adverse, knowing you're coming into a sell zone, which I wouldn't advise. Of course, you would have got your 2%, but you it's gambling. It's going against what we do here. And then if you were waiting for price to get up there, your stop loss would have to be, well, there on the trend line. Nevertheless, you still be waiting for it to get over that trend line because that was an important area. Still might be, which would push your 2% up to there. And that gives you a 6.8 pips stop loss. All right, that was something else that we're working on here at Academy 55. As soon as we got any information on that, I'll let you know. We're always trying to do things to improve improve the indicator, improve the your mindset and make you feel more comfortable in a trading environment with more confirmations. So if you get more confirmations, the more confirmations you can get, the calmer you will be trading. You should be calm in trading in any respect. But yeah, that was a sell zone there. I'll remove that now because we know we're in sell zone territory. But we've got another sell zone up there. Is there enough equity that they can see from retail traders putting their sell orders in this area for them to want to come up here and take that and then come back down to mitigate all this imbalance and this 50% line that we can see? Maybe. Or they might be, you know, because of the big stop loss potentially you could have created, you'd have to create here because of all the barriers that we see here. 6.8 stop loss. This could take a while to sort of get up there, if indeed it is going to go up there, because, like I say, price will have to come down to sort out this imbalance and also at least go to the 50% line that we marked out. So to me, all lends itself into not conditions that I would want to be involved with. Not in my situation at the moment. Is there anybody actually watching this, taking this trade? This on this buy here? Put it in chat if you want to. I mean, I wouldn't get involved because of these support and resistance lines, because I know they get respected a lot. And a sell zone did appear here. Alina took the trade. Raj is just watching and waiting. So presumably if you took the trade, Alina, and disregarded that line, you would have got in there, presumably. On the trend line there, 2.2 pips away. So your 2 to 1 is right before that line. In which case, congratulations. Maybe that's a scenario but as you can see, that's within 1 or 2 candles, relying on that volume. But indeed, technically, that's what could have happened. Are you still in the trade, Alina? Did you win? How's it going for you? I think you must have won by now. Is it still going up? in which case, congratulations. Me, trading in front of you guys, I have to be a lot more cautious. It will be reckless of me to do any of. Ian Orford says, I was very close to taking the one you're showing now, but stayed out, David. Like, there's nothing wrong with that, Ian, as long as you don't suffer from FOMO, fear of missing out. Because, like I say, I don't put these support and resistance lines in for because I do respect them quite a lot. And, well, anyway. And you know, a lot of it is to do with my actual personal mindset as well, because I'm not doing very well this month at the moment, as you know. So I'm being very, very picky. Should always be very picky anyway, but Alina confirmed it was a winner for her. Well done. Congratulations, Alina. But I'm going to stay on and take the next. Well, I'm sorry, I won't say I'm going to take the next sell, but the next one is a sell. And that could, this buy could happen for, well, who knows? But because I'm aware of all the imbalances down here, so it's causing imbalance here as well. Hang on, let me get my pointy thing. Hang on, let's just do away with this indicator a minute. Because here is imbalance, here is imbalance, down there is imbalance that needs to be filled. Could price come all the way down here? Well, I don't need it to come all the way down here. All I needed to do is get my 2%. So there's lots of good reasons why price will be coming down. And indeed, I could be taking the next sell. Could be if going back to the minute. And only one good trade a day is all you need. So Alina, your job's done. Well, congratulations. I hope you have a good weekend. But what you're doing now is watching for educational purposes only. And I possibly will be taking the next sell. If the conditions allow. But bearing in mind that on the higher time frame, I would be expecting buying power to come back into the EUR. And in the short term, we're seeing that. But obviously, of course, there's going to be retracements. And there's good reasons for these retracements, as I showed you with the imbalance and so on and so forth, down here and all that. So there's good reasons for that to happen. And like Ian, I'm not in the trade, and there's nothing wrong with that at all. The the state you must achieve is a calm state, being aware of what conditions are and being aware that conditions can change within an instant. But yeah, see that trade there, that happened within two minutes. I mean, you can't really anticipate that, because in the real world, what could have happened is somebody could have got in there, and then you'd be looking to go over that support and resistance line, which, as we know, you still would have. But if you'd have waited till it got over the support and resistance line, that gives you a 8.9 pip stop loss, which is kind of ridiculous on a minute time frame, because that drags your 2% way up to, oh yeah, way up to there. And it very well might do that. But the longer you're in the trade, the more you're in, conditions can change, obviously. Do it. No, I'll move that over there. So I respect these support and resistance lines. Like I showed you what happened on the hourly time frame. They can either bounce or break. This time they broke, obviously. And now that line there could actually act as support. So price could come down here, react off that line, and still carry on up. But there are lots of good reasons for price to get down here, which they will do sometime. I hazard a guess today, but that would be a guess. Your guess is as good as mine. But they do have to come down to mitigate these, because we don't know when. So stop saying that, really, because to me it seems so obvious that can't think of anybody how anybody else couldn't think that. So it's 5 to 9 now. Oh, hang on, put something in chat. Raj says, interesting session. Fingers crossed for a sell. Yeah, but only take the sell if the conditions are right, Raj. Yeah, we might have a sell, but you are in what we call a retracement, trading against the trend, because we know the trend is a bias above the purple line, so it's a buy bias. So if you were to take a sell, and trading against the trend is a little bit, I'd rather try and trade with a trend than against a trend. But this is the beauty about doing it on the minute. as you can imagine, because we're on the minute, we're looking for small movements rather than bigger movements. So retracement trading on the minute time frame is a lot less risk adverse than trading retracement trading on higher time frames, because you have your stop loss would be a lot bigger, and therefore your take profit will be a lot bigger, and so on and so forth. So yeah, well, if it's but judging by the trend line breaking away from the wave there, it looks to me that we are on, indeed, could we be going up into these areas here? I suggest quite possibly. And that could take, I mean, this is just jumping that far, has taken um, from there to there, has taken how long? 20 minutes. So to get up to there, going at this speed, and also there probably will be a retracement. To get up to there will be, could take an hour or more, maybe, because there isn't much volume in the market at the moment. You can see that by the size of the candles. I mean, look at how small that one is. One, it's a pip. Like I said, $10 million a pip it takes to move, which is worldwide, which worldwide is nothing. Anne says, "Got to go. Thanks, David. Have a good weekend, everyone." It is now Friday the 15th of November. As you can see, I'm in a trade on the EUR USD. This is the trade, red trend, red wave, sell alert, and now looking forward, well, hopefully to come down and get my 2%, but we will see. Bit worried about this line here. Have we got enough volume to get over this line? Because this is a support and resistance line. Will it do the same, or will they have enough volume to breeze past it? Guess I'll find out in a minute. And as you can see, I'm just going for my 2% now. And indeed, that's where we are. So nice 2% trade, and see you on the next one. Bye for now.